All right. So what I would do is I would pick a big area in the 4 hour time frame and I would break it down on a 1 hour time frame. And I would highlight the institutional candles. So if I'm looking for sales in a downtrend, if I have a downtrend highlighted while I'm back testing, I'm gonna look for the institutional candles that is the last up candle before the down move. All right. So that's literally what it is. That's literally how I say it. That's literally how it's said. The last up candle before the down move. All right. So when you pay attention to the last up candle before the down move, which one is the last up candle before the down move? You better see. So here is an up candle and here's a down move. Okay. That's an institutional candle. That block, this white block right there, the last up candle before the down move. Okay. All right. There's this sideways movement right here. There's no down move here. Okay. There's a down move right there. Which one is the last up candle? Oh, it's this one right here. All right. Bet. All right. Pulls back up. Then there's another big down move. All right. Which is the institutional candle. The institutional candle is this one. The last up candle before the big down move. So every time there's a down move, look left. What's that candle? It's the institutional candle. It's the last up candle before the down move. So what I ended up doing was I listened to Vargas. I just had his voice in my head, and I kept highlighting these areas like this. This is how I became a better trader. Kept highlighting these areas like this. Every time there was a big down move, a last up candle before a down move, I would highlight it and I would see what exactly the market did in that area. Oh, when it melted, it came back into that zone. That could have been a nice sell entry. And then it took this whole move. Just off of this one simple little thing that Vargas told me. The last up candle before the down move. Comes back into it, big sells. Okay. Where's another last up candle before the down move? Right here. But nothing hit it. That would have been a trade that you never would have got into because it didn't even hit. All right. Where's another one? Right here. That one hit. That would have been a nice trade. Where's another one? Right here. This one almost hit. This one almost hit. Almost. You would have almost been in there if you was just playing sells off of the last up candle before the down move. You would have gotten in on this one, but this one would have missed. All right. And you keep going. The last up candle before the down move. This one would have got you in. I mean, if you had your entry exactly on the bottom right here, it would have missed you, but could have gave yourself a little bit of wiggle room. I do that sometimes. I don't have it exactly on the candle, and it would have hit you in with the stop loss on the other side of the candle. That would have hit you in. All right. And then you just keep doing it. All right. There's the last up candle before the down move right here. Cool. Last up candle before the down move right here. Boom. You would have got stopped out. Cool. It didn't work there. And you just keep doing that everywhere on the chart until you start realizing how the chart behaves. Okay, you start seeing stuff like this after some time of practicing. You start seeing stuff like this. Oh, the cells in these little middle areas, they work really well, but eventually they get taken back by a big giant move. And that's the real cell. You know what I'm saying? Then you start noticing stuff like that. But first you got to do baby steps. First you got to like do the work, do the practice where you're just like, okay, the last up candle before the down move. Oh, bet that one played out. The last up candle before the down move. Bet. Last up candle. Bet. Bet. That would have been nice sells in that area right here. One entry, two entries, three entries, four entries in one whole little zone. Nice entries right there. And then look, then you keep doing it. Okay, the last up candle before the down move. Last up candle before the down move. Oh, 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 oh. Last up candle before the down move. Oh, that would have stopped you out. Last up candle before the down move. Oh, that would have stopped you out. Now, this is your last up candle right here before this big down move. Speaking to the new people here. Last up candle before the big down move right here. Oh, you would have got stopped out. Now you're starting to see that this little strategy that I'm showing you isn't working out. Why isn't it not working out? Because on a higher time frame, there was a different objective in that area. See, it was pulling deeper into this zone. That's why these little entries wasn't working. So now you start to learn and you start to tinker around with the chart and you start to see, oh, okay, this strategy of the last up candle before the down move really does work, but it doesn't mean it's going to work all the time. So how do I change and how do I adapt? All right. So now you start studying the chart even more, and then you see it again. You see easy patterns again. All right, bet the last up candle for the down move. I think I'm a good trader, man. I think I can get used to this. This is not that hard because it isn't. Last, okay, nice sells. All right. Last up candle for the down move. Now I'm gonna stop looking at sells because if you keep doing that, right here you get stopped. I would have attempted this. Honestly, me being the level that I'm at, I would have attempted this. And I would have seen a little bit of profit right here and I would have got stopped out. And I would have realized just exactly what he's doing, that this money is getting taken out. And that's when the structure changes. I mean, the structure has been changing from down here, but overall, looking at the 1 hour time frame, when this area, this most recent lower high point, lower low, lower high point, when this most recent area gets taken and this one gets taken, the structure is changing. And to identify that, it takes practice. You're not gonna be able to identify that in 1 week or a couple of days. It's practice. You're using the time frames together, the 4 hour and the 1 hour, to let the charts tell you a story. And then when you get good at that, then you go into the smaller time frame and find sniper entries in those same zones. But until you're able to do the 1 hour and 4 hour exercise properly, and you're able to break down these charts doing that, it's always going to be confusing. The structure of the market's always going to kind of be confusing because you got to put in the time. This one right here was clean. Right here, after this break, we got higher highs and higher lows, higher highs and higher lows, big higher highs, nice entries right here on 30-minute time frames. Nice entries. But it takes practice to be able to just spot it easily like that, how I was just able to spot it without even looking at it first. I didn't take this buy though. Just because I'm breaking it down easily doesn't mean I took the buy. I took the buys on elsewhere using the same strategies though. But like I said, it comes with practice. You gotta practice. Um, it's how bad you want it. Behind every great trader is his frustrations of escaping poverty and shit. So it's like practice that 1 hour and 4 hour exercise that I showed you and send me screenshots. Send me screenshots because the patterns are everywhere. Um, like for buys, I can show you some buy examples. For 1 hour, I can't show you any 1 hour and 4 hour time frame areas here because I use smaller time frame to enter here. But I use the higher time frame area using a smaller time frame. See? What was it? The last down candle before the up move. It even works on higher time frames. The last down candle before the up move. Market tagged into this area early in the morning, around 4 in the morning. I was looking for a break of structure on the 5 minute time frame in that 4 hour area. It gave it to me around 2:30 in the morning, right here, around 4:30, 4:10. I was in the trade. And then it just boomed from there. But I didn't hold the whole move. I was out around here. I was out of the trade over here. I collected my money and I left. It just takes practice, but it all works. The charts all work together. It's the same pattern over and over and over. And he's still in there. You got any questions?
Good.
Ask questions before the Zoom ends. No questions?
All right, well, I got a question for y'all then. What's y'all favorite pairs? So that way, we can look at that. Or what's the pairs that you guys struggle with, or vice versa?
Anybody?
Uh, I'd say it depends. Like, are you talking forex or futures?
It's the same thing.
Well, on futures, I only trade gold, but on forex, like I trade GU and USHEF. You know.
I haven't traded USHF since last year. For me, my favorite pair, I feel like my favorite pair, I have to look. Yeah, my favorite pair is gold. My favorite pair is gold because I catch the most winning trades with gold. But I want to make S&P 500 my favorite. I feel like I'm more comfortable trading S&P 500 than gold for some reason. But I have to get out of that mindset because I shouldn't even be feeling that way because a chart is a chart.
The only hard part about trading S&P is that US 30, you know, and NAS is the same basically, but they'll move in the same direction, just differently. You feel me? And
Yeah, I
sometimes
was.
one, huh?
Go ahead, bro.
Just say sometimes one is doing one thing and the other two are doing something else. And then you realize that like, oh, the one I'm looking at is just lagging behind. You know what I mean? Like it could the other two can
Oh,
buy.
divergence.
Yeah, yeah, yeah. You know, the other two can buy, then next thing you know, the one you're looking at sells and then it buys. You know, it's like, well, that's the only hard part about trading those, you know, the indices.
Yeah. Do you have John Fibonacci's book?
Yeah, I do. I just left it at home.
Yeah,
Forgot to bring it with.
that shit's like in chapter 3. He talks about how S&P and US 30 and NAS 100, how they all move together, but there's a lot of times where they'll move separately. So you would just have to catch the outperformer. And then for selling, he says you just have to catch the underperformer, the one that's dropping the hardest, because they'll typically all move the same, but with different strength. Like like Nas 100 and S&P move the same, but I ended up taking S&P.
Well, I think S&P is the one where like if you like, you can actually see if you're gonna lose or not. You know what I mean? Like it's I wouldn't say that. Well, it is the slowest moving out of all of them, just because it's 500. You know, but it's also like you can at least see structure more clearly. You know what I mean? Like the other two just seem like it'll just fly or not. You know.
Yeah.
So I used to like the S&P. I used to do pretty well in the S&P, but like, and after a while, I just kept taking loss and loss and loss, and I was like, damn, bro, like I don't know.
Do you think mainly is because it's a bullish pair?
I mean, yeah, technically they're always like buying, but the thing with the thing also with that is that they don't always come to like the institutional candle. You feel me? Like that's another thing that like one of the other two might, you know, but S&P might not, you know, just because like I said, the other two might drop lower than S&P and actually go to an institutional, or and then S&P doesn't because it doesn't have that kind of strength towards the downside, or is the other way. The other two, uh, the other two pass the institutional, and S&P doesn't, and it just plays off it. You know, that's the hard part to tell.
Yeah, I feel you. I feel you. I'm gonna have to find out because I used to trade indices when I was new to trading, and since I was so inexperienced, I was just getting slapped. But now that I know what I'm looking at, it seems like it's so much easier. So I'm gonna have to test around with what you're saying. But hey Daniel, you have any questions? Because we got 7 minutes left in the Zoom call.
To be honest, I don't. You're actually breaking it down because I didn't understand anything, and then you just showed me like
Yeah, dude. What Vargas told me, it didn't it what okay, what Vargas told me didn't allow me to be profitable right away, but it allowed me to understand what's going on, and that was enough for me to build on top of that. It was enough for me to build on top of it and stay in the game long enough to actually be like, yeah, I need to make money off of this shit. Because if it wasn't for him telling me that, then I probably would have still been confused with the charts. But that's just where it starts, man. After you get good at that 4 hour and 1 hour, then it's another learning process with breaking down the 15 minute and the 5 minute using the 4 hour and the 1 hour area. So it's just levels to the learning, bro. Yeah. Um, I'm probably not gonna say it right. I don't even need to say it, but this guy named Kevin Chadeo, he talks about how um you can learn from people, but you have to learn and practice the right habits. And at first, when you practice a skill, it's gonna be hard, and it might be hard because it's new to you. But with time and more experience, it becomes easier. And then he says like once you get the experience of practicing that skill, you start making souffles like everyone else. And you'll realize that you're making souffles when you start catching the sniper entries that we're catching. I mean, don't get me wrong, y'all literally saw me at the beginning of the week. Like I was getting every single trade that I was getting in, I was getting stopped out. But the thing about getting stopped out is it's not a bad thing to get stopped out. It's only bad to get stopped out if you're risking too much or if you're over trading according to your own trading plan and your own risk tolerance. But if you're not invading that risk tolerance and you're not disrespecting your trading plan, then it's not a bad thing to get stopped out. Because when you're trading, you have to be ready to take loss. That's why we keep our risks the same. That's why I said before learning any chart stuff, you got to keep yourself into the mindset of understanding that you have to respect risk to reward. Because if you hop in a trade, let's say on a small account for new people, if you hop in a trade and you want to risk $5 each trade, but you have a $100 account, and you're telling yourself you want to grow that account slowly by risking $5 each trade, but because you've got into 5 losses in a row, or maybe 4 losses and 1 win, you're like, man, I want to make my money back, and you end up risking $20 in one trade, and that trade ends up stopping you out. Now you got to make back that $20 too, on top of the other $5 trades that you got stopped out on. So you always got to keep your risk the same, because when you get into a winning trade, that one winning trade will make back all your losses and more. Most of the time and more, that one winning trade. You know what I'm saying? So you have to have that in your mind before anything else. Because when you have that in your mind, all of the chart stuff and all the chart reading becomes easier, because every time you get stopped out, you're just like, it's all right. That was only 1% of my account. Whatever. On to the next trade. And then that next trade gives you a 1 to 5. Now you're making 5 times what you risked, and you wasn't even expecting to win. And it was all because you was not attached to being right or wrong, because you understand beforehand how much you're risking, and you understand beforehand that you're trading by percentage. So that's why you see most of us hopping into trades left and right, because we're not afraid to lose. We're not afraid to lose because we already have a predetermined risk that we already accepted within our own trading plan, within our own self. Everybody is different. Your trading plan is going to be different than my trading plan. Your account size is going to be different than my account size. But yeah, man, that's the most important part. It's boring, but it's the part that's going to make you the most successful. And then the chart reading comes after. And I think that's why a lot of people don't want to learn trading, because of that fact. Because it's easy, but it's not, in a sense, because it's you against yourself. And yeah, man, there's 1 minute left. Anybody have any questions?
So I can watch it.
What?
Are you gonna put this on YouTube so I could rewatch it?
Yeah,
Thank you.
yeah, man. But all right, y'all, I'm about to end this Zoom call. I'm assuming we're gonna drop a Zoom call in the morning. We'll see. Peace out. Oh
I
wait, there's a
appreciate you.
chat. All right, you're welcome,
Thank you.
y'all.
Later.